everyone, it's Jessica LeMoine
and Lee Johnston with Atlanta Fine Homes, Sotheby's International Realty.
Today we're here with Shelby Pennix from Pennix Mortgage, and we're here to ask him a few questions.
That's right. So Shelby, what do you find is the most pressing issue in our current market conditions?
Well, there's so many offers out there that it's, I see a lot of buyers having a hard time getting under contract.
Yes.
There's many buyers that are wanting to get under contract, trying, but they just, sometimes they're not stacking the cards in their favor.
So what is it that's keeping them from getting under contract?
A lot of times it can be bad offers. If you're not working with a true professional that knows this market inside and out, knows how to be aggressive, then you know, that can be, that's problematic, and I think that's why there's a lot of frustrated buyers out there.
And Shelby, what can you and your team specifically do for our clients in this market?
So what we like to do is when we are introduced to a new client, we like to do a full pre-approval.
Yep.
And we also will collect their documents up front. So what we do is we can get them underwritten when they go under contract within the due diligence period. Okay, by doing that, a lot of times that helps us to remove the financing contingency, which makes your offer look even more aggressive.
So it's more aggressive when working with a cash offer. If there are multiple offers and one happens to be cash.
That's correct. Yes, we're competing with cash offers because
right.
we were able to do it that way. That's correct.
Yeah, we're seeing that in the market as well. So the takeaway from this video is when you have a realtor and a realtor team that is working on your behalf and really knows this market, knows the contract process, we can introduce you to lenders like Shelby, who we have a relationship with, that could also be your advocate in getting those contracts through and getting your dream home.
That's right.
Yeah, I would just like to add, if you're out there and you're frustrated and you've been working with someone, you need to find some true professionals like these ladies here. And we partner up together, and by partnering together, the communication is extremely well, and we can be very aggressive with your offers. And our number one goal is to get you under contract, because we understand your frustration when you just make offer after offer, and we can help you avoid that going forward.
Absolutely. Now let's switch a little bit and talk about the new loan limits that we have that have just been announced.
Okay, so there's a lot of that stuff out in the news. A lot of people don't even understand what conforming loan limits are, so I'm going to break it down kind of basic real quick. But conforming loan limits are the maximum amount that you can borrow to do a Fannie Mae or Freddie Mac loan. When you go above those loan limits, then you're doing what's called jumbo lending. Now, the good news that these loan limits have increased is because it allows you to purchase a home with a conventional financing from Fannie Mae or Freddie Mac. It allows you to put less money down, and it allows you to have a lower interest rate. The underwriting process is not as stringent as it is on a jumbo loan.
Right.
In most jumbo loans, you have to put 20% down. With conventional loans, you can put as little as 3% down. So they just recently announced for 2022, the conforming loan limit is going to be $647,200. So
Which is huge in this market.
That's a lot of purchasing
Yeah.
power. So to kind of put it in perspective, if you were to buy a home for $680,000 and put, say, 5% down, then you can still do a conforming loan. So that's a lot of purchasing power.
Considering how much prices have increased over the last 2-3 years, it opens up a whole new sector of the market for us.
Absolutely, absolutely. And then FHA increased their limits as well, and that's $420,100.
So why would someone want to go FHA over conventional?
They wouldn't. I'm teasing. The only reason, so like when the client comes to me, I basically determine that for them. Right. So if they have, say, maybe a little bit lower credit scores, and you know, they can put 3.5% down with FHA financing. FHA loans are great loans. However, they do require a lot of mortgage insurance, so that's why they will allow lower credit scores, higher risk credit, because there's a lot of mortgage insurance. There's upfront mortgage insurance of 1.75% of the loan amount, and they just tack that on there right away for you. And then there's monthly mortgage insurance. That's a 0.85% factor, which means it's almost you're paying 0.85%, almost a full percent in mortgage insurance a year.
Wow. So that could cost you more if you have a little bit lower credit.
That's correct. Yeah, and typically when you get to about 680, 700, that's kind of the sweet spot for to do conventional financing. But even if you have lower credit, that's not the end of the world. A lot of times we can look at it, and there may be things that we can do to help boost your credit relatively quickly. So sometimes we have people that come in that qualify for FHA financing, but after we make some credit tips and they do those things, we increase their score and we're able to take them conventional.
That's great. So we want to know if your lender is working for you as hard as Shelby at Pennix Mortgage would work for you. And if you're not getting the results that you want, we would love to partner with you and help you find a home.
Give us a call. We can't wait to speak with you.
Thanks for joining us, Shelby.
My pleasure. Thank you.